Hi guys and welcome to the trading show. This week we are gonna talk about
markets, grain stocks rise, our portfolio, good returns on gold, tip of the week, intraweek bias on feeder cattle, and the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Hello everyone and welcome back. Let's see how the markets have moved in this beginning of the year, starting from the stock index futures, which you see at 5 days all have negative returns, both American and European. The bonds remain essentially unchanged. The energy futures are all positive, although with no particularly significant movements, and the same goes for metals, with the only exception for copper. On the other hand, meats futures are negative, and now let's see the financial sectors that have moved the most. Here we have soft commodities, which, excluding orange juice, show interesting returns at 5 days, 1 month and 3 months. But above all, I'm referring to the cereal sector, which, as you can see, rises very strongly during the week, and we see this to be a fairly lasting trend. You can see in this graph the wheat, here soybeans meal with a very well-defined uptrend, the soy that has entered in a very strong uptrend since June, almost parabolic now, and red wheat, corn, and finally the bean oil future, which also shows a strong bullish trend. As for currencies, there are no particular movements to report. EUR/FX future has slightly retraced, but in particular I want to show you the Bitcoin future, because in the last phase of the year, and especially at the beginning of 2021, he had a very intense movement. In particular, I'm referring to this decline, which was almost 30% on a daily basis, and then it recovered and returned close to historical highs. On the volatility front, we see a slight increase in volatility for equity indices. They are in the upper part of the percentile on a monthly basis, but they are still fairly low compared to the values of the last year. The same situation is also supported by the implied volatility. We see here the volatility indices on the SPX, which are all slightly increasing, but as you can see they are still in contango. So this is a rather modest increase in volatility compared to the values we saw during 2020. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. We started 1 week ago, again with the system, after the break, the holiday break for the Christmas. And in particular, this week I want to show you 2 systems on the gold futures market. The first one is a trend following strategy that I already showed in the past, and the second one is a bias strategy that enters short in the first part of the session, while it enters long in the second part of the session. So we can start with the first strategy, the trend following one, and this strategy was developed in 2016, so it has now 5 years, we can say. And from the date I developed, it has never lost a year. We can see that in the previous day it took a stop loss and then a nice profit target of 45 points, which is $4,500. Also, we can say that this strategy has a little stop loss, 7.5 points, which on gold markets is a really short stop loss. And we can see that, of course, many time is eaten, as here in this session, where the strategy entered long and took a stop loss, and then entered short, took a stop loss, and then exactly at that level where we had the stop loss order, and then the market collapsed in the direction that the strategy were. So a little bit unfortunate. Despite this unfortunate trade, the strategy, the equity curve looks quite good. We can see that the system is around his equity highs. And also, as said, this strategy has never lost a year until now, of course. And we can see that in 2020 the strategy performed really well with profits of over $25,000. Now we can switch to the next strategy, which is the bias one. So, as said, is a bias and it enters long or short at different moments of the day. And then this strategy wait for a confirmation, a breakout confirmation on hourly bars. We can see that in the last week the strategy took this good trade of around $1,800 and also this one which was pretty flat. We can see also here from the annual period analysis that the strategy performed really well in 2020 with an average trade of around $200. And also the year 2021 started really well. From the equity curve, we can see that the strategy is near its new equity peaks. And of course, the equity is rising. I want to show you also the equity for the long side and the short side because they behaved really well each other. So in the moment where the long side weren't so good, the short side was so good. And so we can see that the equity curve detailed overall is really profitable. And we hope, of course, that this strategy will continue in this way.
Hello everyone and welcome from Andrea Unger. Today we will have a deeper look into a particular event or particular behavior of the feeder cattle future. The feeder cattle future is a future listed in the CME exchange and it's a pretty illiquid product and then it is traded by quite few traders in general. So you have to take care about the slippage and the commission impact when you trade this kind of product, of course. But going to our chart here, we can see the average weekly movements for the feeder cattle future. So here on the x-axis, you can see the day of week, so starting from Monday to the end of Friday, there is represented by the number 6, and on the y scale, on the y-axis, you can see the average delta movement from a bar to the other one. So when I have a look to this type of chart, I just try to find if there is a certain patterns or if some certain movements are repeated in different historical periods. So for example here, what I try to see if there is a certain movement that is repeated both on the red curve and at the same time on the blue curve. And this is because the blue curve and the red curve take into account different portions of time, and thus if I find the same kind of movement on both curves, I have more chances to confirm that this kind of behavior has a certain good consistency. Otherwise, if I find that a certain movement happens on only one of the two curves, possibly on one of them has stopped working or is a kind of new bias that hasn't been confirmed on a larger amount of time. On these two curves, for example, we can clearly see that from Monday it seems to be starting a sort of long bias, so from here, that seems to last until the end of Wednesday, so here, between Wednesday and Thursday. But if we have a look to the blue line instead, we can clearly see that the movement is not quite similar, because of course there is a rising movement, but in different times, and for example the Wednesday is quite different. So in my opinion, this kind of movement on the red line hasn't been confirmed on the blue line, and vice versa in this case. And in a pretty similar way it happened also for what regards the short bias into the training week. Because for example here on Thursday we can clearly see a bearish movement that is quite different on the blue line. So it seems that the behavior on the Thursday, on average of course, it has been quite different in different amount of times, so on the different periods considered. And this is a sort of alarm bell for me, because I prefer to trust to more consistent movements, so to movements or behavior that on different amount of times were more close or more similar. And in this case, for example, the most similar movement we can find between the red line and the blue line is on Friday. That it seems there is a sort of bearish movement, so here and also here on the red line. But in any case, this one by standalone, so as a standalone movement, is not sufficient, in my opinion, to be traded quite effectively because of the average trade and because of the impact of the slippage and commission on those products.
Rollover calendar. Next week only crude oil futures will expire on January 19th, and the following week, as usual, the other energy futures will follow: natural gas, heating oil and gasoline. Finally, I remind you that at the end of the month, on January 19th, there will be the expiration of the Bitcoin future. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call, totally free, with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of The Trading Show.